Kong newsroom. Darius, let me first ask about the BOJ's latest move to try to encourage lending in the country. They're accepting a wider range of collateral, but we've seen a lot of moves from the BOJ, such as buying equities from these banks to encourage more lending. Is this really going to get the job done?
I think that today's step to just broaden the collateral into government-backed and municipal securities is pretty incremental and will not make a major difference to the Japanese economy. Therefore, I expect that they will have to keep going and over the next several meetings, further broadening the collateral, increasing the size of corporate bond purchases. And I also think that they will ultimately, in the course of Q2, cut the main interest rate to zero, to be seen as doing all they can to ease the huge recession that is engulfing the Japanese economy.
Dariusz, given this announcement today, can we assume that what they've done so far has not really worked, and why would that be the case?
We can assume that the steps taken so far are considered both by them and the markets as insufficient to meaningfully slow the pace of economic contraction. The reason being that they started at 0.5%, so they didn't have much scope to cut rates. And also, they were very late to move towards quantitative easing and haven't really embraced that yet. Something that they definitely need to do given the dire straits in which the economy finds itself. You know, at least 5% GDP contraction this year is huge, and they need to do more. Luckily for them, the yen has weakened, which is favorable for the external position, but insufficient to lift the overall demand in the economy.
And let me just stick here with the yen theme. It has weakened just a little bit, but the trend over the last weeks or months was actually towards a strengthening of the yen. It's only really weakened a little bit since investors came back with a bit more openness for risk.
The yen has definitely continued to be correlated with the risk appetite in the market, declining when that appetite was increasing, and this is something that is going to continue. So everything depends, as far as the Japanese currency is concerned, on the environment in the global financial markets. If they continue to improve, then the yen will weaken. This would reduce the need for further unconventional action by the Bank of Japan. But my sense is that in the short term, unfortunately, the rally in the equity markets has gotten ahead of itself. There needs to be a correction. This would push the yen to strengthen and open the door for Bank of Japan to move again, possibly on interest rates, and for sure towards further quantitative easing at their next meeting.
Okay, well, Dariusz, I want to take the discussion towards Australia, and we're expecting the RBA interest rate decision later on. You're expecting a quarter-point cut, but credit swaps are pushing for a 100%, 50 basis point cut. Why do you think they're only going to move by a quarter percent or quarter point?
Well, the RBA has kind of boxed itself at the last meeting when they did not cut interest rates despite the poor external and Australian macroeconomic environment. Now it will be difficult for them to argue that conditions have deteriorated enough to warrant a resumption of very dramatic interest rate cuts. But at the same time, the Australian dollar has firmed so far that it is going to impact negatively the external position, and therefore it warrants some easing. So, you know, to balance those two interests, how they are perceived in the market and what is the need of the economy, I think they will cut only marginally by 25 basis points.
Okay, well, watch out for that decision. But Dariusz, I also want to talk to you about this equity market rally right now, because you think it's going to come to an end today. Why?
Well, I'm not sure that it will happen today, but basically equities globally have risen so far despite the fact that fundamentals haven't really changed that much. We are still awaiting the fate of the U.S. financial system as the bank stress tests are conducted, the public-private investment program will be put in place, and who knows what happens with the financials. The stability of the financial system is not guaranteed, and the global economy continues to contract. So I think that equities have rallied too far and are ripe for a correction.
Okay, Dariusz, thank you so much for joining us as Dariusz Kowalczyk of SJS Markets.